Hi, folks. This is Lee Gettess with the Market Sense for the week of August 10th, 2010. The charts we look at are provided by the Trade Navigator software that's from Gettess Financial Technologies in Colorado. First chart we look at here is a weekly chart of the U.S. Treasury bonds. As you can see, they've been in an uptrend for a little while now, and thought they might be running out of gas, but they had a very violent reaction to the Fed statement today. Spiked all the way up to 130.23, I think was the high today. The blue line we have as resistance up here is around 130.12, so they've kind of spiked up above that and come back down. Doesn't mean they can't go higher, though. I mean, if they really think the Fed is serious about buying treasuries, then there's no reason to fight the Fed, so they'll go up from there. The support where the week opened was around 129.10, and that certainly could be enough support. That's where you see, but I don't know if you can actually see the red line, but there's a purple line and red line together at that area. If they decide, and bonds are notorious for the morning after a Fed meeting having a totally different reaction than they have in the few minutes they're open after a Fed meeting, the day of the Fed meeting, so the next morning they might react differently. If they decide they don't like it tomorrow morning, the blue line and green line you see down there are in the 128 04, 06, 08, somewhere in that vicinity. So they could drop down pretty good, but I think you'd have to assume the trend is up and that they could actually still go higher. However, they have hit resistance, so if they stall there, we can't be very surprised, I guess. Moving to stocks, stocks are having a little uptrend here recently, but one thing I'd like you to point out, if you look at the move that occurred back here from February up through April, it was a relatively quiet. The bars are relatively small, but they just sort of worked up steadily regardless. And then volatility picked up, and now we seem to be having the volatility shrink down, but again, we're kind of just moving up steadily here, and there's nothing to say they can't do that for a couple more weeks, despite the fact that they seem to be running out of steam here at this old high from June. What we've got is resistance around 1129, which sort of coincides with this old high. If they can break through that, there's a little more around 1135, but I really expect that they will at some point take out this high and move a little higher. I'm just not sure how much higher. The support that they've held so far is, well, it's around 1108. The key area really is right in here, which is the 1100 area. As long as they hold that, I think they can still move higher. If they break 1100, the next thing down here is around 1080, and boy, if they don't hold that, I'll be kind of surprised, because I really expect them to maintain a little bit more summer rally here. And again, I expect them to take out the June highs and possibly even go challenge where they were at this swing high right here. I hope you can see where it's where this inside bar got up to the green line right there. I think there's a possibility they can get that high. Heck, they could get all the way up to the 1200 area again. I can't rule that out. But I think over the next couple of weeks they might still move a little higher. Anyway, that's what we've got for you today. I hope you can find something profitable that you can get yourself into this week. Thanks for checking in, and let's see you again next week.